Hello, everyone. Welcome. Hello, everyone. Welcome, welcome, welcome. So, today is a very first day of the month, of the quarter. I know that it's Tuesday, so we have seen a lot of repositioning of the market anyway happening since Friday. And yesterday, Sunday morning, let's say Sunday afternoon, let's say on the Asia Open as well. But no matter what, it's the very last quarter of the year. So we had to go through to see what happened so far and what is expected for this quarter, because it's expected to be a really crucial one, and a quarter which we will actually see all the things that we were pricing in ahead of in the beginning of the year. All the things that actually I'm gonna hide a bit, all those things that we were expecting in January, but now it seems that now is the time to take place, and I'm referring to actually happen, and I'm referring, of course, to the rate cuts, which even though they were expected to start very early in 2024, nothing really happened, and we have seen the easing actually taking place the last just the last month, okay, and ahead of us as well, so until the year end. So I'm gonna jump into the market as well. I know that for some of you it's bank holiday, so I understand you're taking the day off. Of course, enjoy. I think in South Africa and Kenya there is a bank holiday today, if I'm not mistaken. I'm really sorry if I'm wrong, okay. So yeah, so as I was saying, I'm gonna show you Nikkei. Let's start with the stocks, and more precisely the Asia session. Okay, Tim, because we had a really impressive moves overnight. Mr. Ishiba um, Mr. Ishiba win the election. So let me just, so we have a Nikkei. Okay, have Aussie yen over here. Just give me a second. Mm, so. Okay, my bad. Indices, and here it is. Okay, that's a bit busy, as you already know. I'm gonna put the daily chart on. Perfect. So zoom in a bit. That's the 1 hour chart. You can see that overnight we have seen an appreciation of Nikkei. Okay, so I would like to explain a bit, to focus a bit on the good morning. Have a great month again ahead, Sibonisi. So watching from South Africa. Okay, so enlighten me. It is a bank holiday, right? Or is not? Am I mistaken? I have confused the countries or something. So yeah, great month and a great weekend. Well, sorry, great quarter ahead, guys. So as I was saying, I am presenting Nikkei over here. I know that it's not something that you really like to trade, but we need to explain a bit what drove the markets overnight, okay? Because you know that the Bank of Japan is really in focus, okay? Hawkish tone after many years. So what we have seen overnight, and what supported Nikkei, it was the it was, of course, Mr. Ishiba. Okay, so Ishiba won, as you may already heard. Okay, so this is something that supported, at least initially, Nikkei over here. And okay, and we had seen also some really uh, we have seen on Monday, we have seen a bit of a slowdown in the equities in general globally. So this is something that it went in contrast with the performance that we have seen on Monday. Okay, so Mr. Ishiba, just to sum up a bit, Mr. Ishiba is a supporter of the hawkish tone. So the fact that with his election we won't is unlikely to see, let's say, a change in the monetary policy is something that supports further the expectations for a hawkish tone from the Bank of Japan, for another rate hike, and so on and so forth. So this is a 2% rally in Nikkei overnight. Okay, so it was the race, it was the party leadership race in which he won the election. And that's why we have seen in general the Asia equity market gaining, okay? While, let me just, while if we put on the US indices, okay, Dow, Nasdaq, as you can see, Dow is a bit sideways since yesterday after deep down and recovered gains. Nasdaq over here. Let's see the daily chart. Ignore these lines. They are already backdated. Um, so that's the daily session. Can you see this tiny, tiny, tiny daily candle? You can see pretty choppy, muted session. That was the theme yesterday. So muted, neutral to negative, let's say. Okay, overall. So equity market yesterday, yeah, it was a bit um, a bit weak. Okay, so the responsible for that might be also the fact that China and Hong Kong are also are closed for holidays. So you understand that the volume is much less. So now, um, so as I was saying, Asia markets initially jump on the election of from Mr. Ishiba, but currently they are a bit mixed, okay, with the only one that gained back some of its losses. It was Nikkei, but in general quite mixed global equity market. So I'm gonna jump quickly into yen, okay, because on this rally that we have seen in Nikkei from the election of Mr. Ishiba. Here we are. Bizarrely, I will say, bizarrely, we have seen also, actually not so bizarrely, but yeah, because with the Nikkei spiking higher, we have seen yen getting weaker against the US dollar, mainly all the other crosses. So you have over here a nice smooth uptrend of dollar yen, indicating that is getting weaker against the dollar. I'm saying bizarrely because that is not in line with the hawkish outlook that we are expecting from Bank of Japan. That's why I said bizarrely. If we take the correlation, that's okay. I mean, between Nikkei and yen, but if we consider that Mr. Ishiba's election indicates no change in the monetary policy, further hikes in the near future, that shouldn't be the case, okay? So yeah, yen weaken against the dollar. Um, by the way, Ishiba will start. I mean, will start with his new position. Uh, uh, actually, right now, since Kishiba, the previous prime minister, already resigned. So, yeah. So this is what we have seen so far today. So this move looks to be more of a dollar strength rather than a yen weakness, my dear friends. Okay, this looks to be more of a dollar strength than a yen weakness. Now, let's move on. By the way, guys, remember this is your session. You can ask anything you want. You can ask anything you want. This is your session. Happy month. Good morning, everyone. Good morning from Nigeria, Uganda, South Africa. Welcome, everyone. Uh, Good morning, Andrea. I haven't got access to Singapore webinar. What do you mean Singapore webinar? Is it from one of our colleagues and you didn't manage to register? Can you send us a link or something just to check my Nikkei and yen? Okay, I see that you're happy. Ghana, welcome. Kamal, welcome. So my dear friends. Sorry. Okay, explain a bit what happening over here in the yen before we do the technicals. I know that I spend a lot of time on yen, but as I said, yen weakened against the dollar, and it seems that is still the case. I know that we have seen this where is it? This the last actually in the 15 minutes ago on the open of this candle, of this 1 hour candle, we have seen a pullback, but guys, it's still in an uptrend, at least in the short term. Okay, so nothing really changed for the time being. You can add just a really steep channel or anything you wish just to follow the trend. This pullback, for now at least, is just a correction, okay? It's just a correction. So what we have, the yen weakened against the dollar, okay? Not because of Mr. Ishiba and the monetary policy of Bank of Japan, but due to Mr. Powell. Okay, Mr. Powell, we had a lot of comments from Mr. Powell yesterday, and he pretty much stated that that the bank will lower interest rates, but over time, like so, a bit. He was a bit more conservative than what he used to be lately. And also, he highlighted that the overall economy remains on solid footing. So that is something that basically weaken the yen, because there was a lot of cash flows into the safety of dollar. Okay, plus I'm not sure whether you heard the news, but unfortunately we have seen the tension in the Middle East getting worse and worse, getting increased. Basically, the tension increased significantly since Israel unfortunately targeted ground raids in Lebanon. So you understand that we have a lot of risk, a lot of geopolitical risk. Okay, so this is something that uh, could be seen also in the market. It's not fully. We haven't really see this right now, but we need to keep ourselves up to date with the news, because it's something that we might. Sorry, wrong. I'm gonna come to the dollar in a bit, in the oil, sorry, oil in a bit. For now, I wanna finish with the dollar yen. So, yeah, we need to keep an eye on the risk sensitive assets, on macro backdrops, on the global geopolitical tension, because we might see, at least in the near future, a lot of shift into safe haven assets. It's not. It's something that didn't happen so far today, but after the Israel's action, we need to keep ourselves on our toes. If I'm saying it properly, yeah. So a lot of geopolitical pressure is on. Now, what else? Yeah, guys, the technical picture from dollar yen. Look at that. It's still in an uptrend, so keep an eye on that. Okay. So it's halfway already after this big drift that we have seen on Friday. Okay. So we and a confirmed pullback or reversal in the near term, in the next few minutes or even in the next few hours, it will be a confirmed breakout outside of the channel. So closing below it or even extending further below it. So at least two consecutive candles outside and below the channel in order to indicate that could return back down to 143, 142, 50 territory and so on and so forth. But for the time being, this looks to be unlikely for now. I know that this candle looks quite big, this 30-minute candle, but what confused me a bit and is the really it's the increasing bullish bias that I can see in MACD. RSI in the 30 minutes chart flipped lower but still above 50. So this looks to be a short-lived decline. So keep an eye on it, okay? Keep an eye on it. So yeah, we need a confirmed closure outside and below the channel, and even another one to indicate that there is indeed a reversal. Now, overall, I will try to remind you that we have been in a consolidation for 8 days in a row. Why I'm saying consolidation? Why? Because in August and up to the mid of September, okay, it had been to down channel, right? Which not unfortunately, but which it broke, okay, in the mid of September, and since then is moving above it, consolidating above it. So like it holds that downward channel like a floor. Okay, so it's neutral. The outlook is neutral in the in the short term, sorry, in the medium term, in the daily chart. So basically, sideways between 145 and 142. So consolidating for 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. So in the intraday, upwards channel, in the daily chart, consolidating stuck between 142 and 145. In the long term, of course, it has been to the back foot, has been drifting the whole year, so there's no doubt about it. But yeah, I'm trying to cover everything in order to cover any type of trader that we might have over here. Okay, guys. So in case that today you see indeed that breakout that I was talking about, okay. Indeed, if that candle close be outside the channel and a consecutive one extends further lower, then your attention should be on the next support level, which is the round 143 level, or even lower at the 142.50 level. Okay, now a failure to close outside the channel, it would be just a buying the dip situation, correction at the bottom of the channel before another attempt to the upside. So a higher low before extends again higher. Okay, I think that's quite easy busy, right? Use your fractals, use your pivot points, or use your extensions. Why not? Let's see. So kick the 100 territory, pull back down again. We don't have any new fractals over here, so let's wait and see. But a rebound could open the doors to 145, while, as I said, extension lower could turn the attention to 143 level. Now let's move on, guys. Any assets you want me to cover? I mean, any particular assets? Hello, Justice from Nigeria. Oh, David. What I said is that you can register to the webinars that the team in Asia provides. Okay, like we have basically, though I don't know. Um, Basically, is not wise, because the team over there speaks Indonesian, Vietnamese, Filipino. So what I said last time, I remember, what I said last time is to follow the social media that we have in Asia. Okay, the social media. We have Telegram channels in Malaysia, in Thailand. We have Facebook, particularly not the HFM one, the global one. We have HFM Malaysia, HFM Thailand, the HFM. So maybe this could help you. Okay. Yeah, I was referring to the social media, not the webinars, because even if you join a live streaming from our colleagues there, it will be in a foreign language, so I'm not quite sure whether that will help. But at least in social media, there is the auto translation that helps pretty much. But mm, think about it. Maybe we can organize a webinar for how to trade during Asia session. Why not? Asia session. I will have put a note on my hand right now. Okay. Okay. Gold and dollar. Yes, sure. Sure. Gold and dollar. Good afternoon from Bangladesh. Give me a second. Okay. Agnes. Okay. No one asked about the S&P 500 though, but okay, we're gonna check it in a bit. Oops, sorry. So we have dollar over here, and I would like to have the S&P 500 as the very next one to cover, because we had another rally. So let's see that later on. Now let's focus on gold for now. Okay, so I have started with the daily chart on purpose, to be honest. Sorry. And the reason for that is because we have seen Sorry, just a second. Yeah. So we have seen gold posting one of its biggest quarterly gains since 2016. Okay, I'm gonna zoom out so you can see it as well. Let me just a second. Weekly chart or even weekly chart, sorry. So look at this beauty. Monthly, yeah, monthly helps. So look at that. 2016 is somewhere here. And look at this impressive rally that we have seen. And mostly it's after the 2009, the global recession breakout that we have seen. But if I zoom in on this triple top that we have seen in 2021 and 2023, so this triple top was officially broken on 3rd of on March, sorry, on March, this March 2020 24. That was when this triple top broke, okay, and confirm a rally, a sharp rally for gold. So gold has just posted one of its greatest and biggest quarterly gains since 2016. Okay, another record high. Let me zoom into the 4-hour chart. Another record high has been seen on a Friday, 2685, as you already know. There is a pullback, of course, since yesterday. Okay. However, please pay attention to the fact that it looks unable to break the 50 period moving average. Right now, I'm in the 4-hour chart. I'm gonna get back to the. I'm gonna be trying. I'm gonna be back to the daily chart, okay? Because I would here, like to put the 20 as well. Actually, and the 50. Okay. Let me get rid of that one. Perfect. So for after the record highs that we have seen in September, we have a pullback, a slight pullback, but that doesn't change the overall outlook, guys. Look at this impressive rally in the MACD indicator, in the momentum. Sorry, let me just be precise. MACD keeps rising. RSI keep rising. Look at very careful. I have connected the lows and it keeps posting higher lows and higher lows, indicating that bulls are still in control. The only one that comes in contrast with my long-term indicators, it was stochastic, but I'm using stochastic for short-term intraday analysis. Okay, so short-lived pullback. Okay, this is what we are seeing over here. Let me go back to the 4-hour chart, and you can see that the 50 exponential moving average is an asset. Actually, let me put the simple one. I think it was much better. No, exponential was just fine. Okay, here we are. So it's struggling for 6 sessions in a row to break below the 50 period moving average, indicating that this pullback might run out of steam already. So my dear friends, this bottom and more precisely the 50 period moving average. So 2633 and 2623 area, it's the a very crucial support level for gold in the near term. Okay, so I'm gonna put the stochastics back on. Yes, but as you can see, as I already mentioned, it looked to be this pullback is running out of steam, and you can prove that by checking your intraday indicators. Stochastics, for example, rising. There is the indication of a bearish crossover here, but nothing really happened yet. It didn't cross below 80, so no indication. MACD rising to turn above zero, so that indicates that we have some increasing bullish bias. So this, as long as this zone is being held, this floor is being held, there is no indication that gold could extend lower. Okay, outlook remains positive, so keep an eye on a rebound or on a pullback, and more precisely, you can use your Fibonacci's or you can use the latest swing highs and so on and so forth. But a return back above the 2650, 2655, 54, 55 to be precise, 2655, a return above that territory could indicate a move to new record highs for gold before the retest of 2685, which is the latest record high. So on the upside, 2655 a key resistance level, while the zone that I drew over here, 2632, 2623, is a very important support level. If indeed for any reason, I don't know, geopolitics, any surprise that we might see, who knows lately, any surprise that could add pressure on gold and leading to a break of this zone could open the doors to to the last swing high that we had, down to 2680, 2586. Okay, clear? I'm on the market seeing euro, dollar, and pound falling. My analysis see bearish today, but I see. Okay, Okay, great. Let's start with the euro. And you are absolutely right, Sibonisi. No, Shidi, also you wanted euro dollar. So guys, yes, yes. A really aggressive selling started just earlier in the European Open. Okay, this is a very long comment, but yes, you're right. On the market that you are seeing euro, dollar, and pound yen are falling, and your analysis is seeing bearish today. You are absolutely right. I will explain right now why. But there is a high impact news, so I should combine my technical with the fundamentals and plates. Okay, okay. I can see. Okay. So First of all, you are absolutely right saying that you can see some bearish performance in the dollar crosses. In this case, euro dollar, pound dollar are falling into the European session. So indeed, this is the case. The in general, we had. We had what we had from the data perspective is that we have seen the Spanish PMIs earlier, if I'm not mistaken, really close to the sorry, to contraction, to the 50 zone, 53 if I remember properly. Let me check basically. Let me be more precise. Where it was it? Where it was? Uh, yeah. So services from Spain came out. Sorry, manufacturing from Spain came out of 53. So at neutral zone. Services, Switzerland's manufacturing continue to contrast. So that's not a good indication for the European Union. But what I wanted to say is that we had some okay, we had some reports from Deutsche, okay, uh, that they said basically that they are expecting ECB to cut rates in October, okay? But not only that, but also they are expecting in December ECB to cut 50 points rate cut, okay? So that's a very significant dovish call for expectation, let's say, dovish. Dovish scenario, dovish speculation for euro from Deutsche. This is something that could indeed this is something that could indeed add that pressure to the euro against a pretty steady dollar today. Okay, in general, we are seeing that the markets today are in a more cautious mood. Okay, dollar is holding steady, euro weaken on these reports and also on the PMIs, and possibly let's check pound as well. Let's check pound as well. Where's my pound? Guys, it's the beginning of the quarter and the month as well, okay? So let's not forget that. Where was it? Where is it? Euro. Pound. Okay, okay. Okay, yes. Yes, indeed. So, and it's not only the candles, the three consecutive hourly candles that they keep dropping lower and lower, is also the momentum. Look at that CBC. MACD turned negative, extending lower as well. RSI is below 50 and points further lower. So there is further area to be covered at the bottom of the RSI. So I'm gonna have, this is the pound, guys, pound 30 minutes chart, okay? Pound 30 minutes chart. And I'm presenting this on purpose because if, like our dear friend David said that he likes trading the Asia session. So, and it's good for him because if you think about it, he possibly had seen this bearish cross much earlier than what we than us. Okay, so that's the good thing about the Asia session. You can get prepared for the European as well because you're seeing some important breakouts, crosses, and etc. etc. So the 5 and 9 bearishly crossed like more than an hour ago. A huge 30 minutes candle 10 minutes ago. MACD keep extending lower. The stochastic as well, and with further room to the downside as well. RSI the same. So momentum indicators in general, the oscillators and indicators that I have at the bottom of the channel of the bottom of the chart suggest that in the near term, in the short term, the bears are in control. But it's not only that. I'm not quite sure, but it looks that yes. So we have seen a break. Let me double check. Indeed, okay. This zone over here, and more precisely the 133.50 level, was a key support level for this week, okay? And it has broken. Of course, this candle has not closed yet. We have another 20 minutes to go until this candle close. But um, um, uh, if indeed it confirms closing below the 133.50 level, then attention turns to the latest swing low at 133.10. Okay, so that's the very, very next immediate support for support level for a pound cable over here. And I would like to check something else as well. Indeed, MACD keeps dropping. Look at that. Okay. RSI the same. Guys, don't forget that by connecting, if you have seen repeatedly lower highs in your RSI or higher lows or in your MACD, this is still tradable because let's say, for example, if we see RSI crossing above our trend line over here, okay, crossing above and quite sharply, that's a trigger point for considering a long position. I mean, I put trend lines on my on indicators if and only if I see consecutive lower highs or higher lows, etc. Because they can help us. They can help us. There, a potential breakout of them can help us with a potential position. Okay, so it's not. You feel free to use trend lines in your indicators as well, not only on the price moves. Nonetheless, what I wanted to do over here is apply a channel. So we had been in a channel up to here. Yeah, you see, it satisfies it quite well, the highs and the bottoms. But since yesterday, we have been outside the channel. So that's another important indication that something is changing in cable. So keep an eye on that, guys. But for the time being, indeed, we have a break outside the channel, below the channel, which is a bearish sentiment. We have a break of last week's, actually, yeah, of the last 3 days support level. I'm referring to 133.50. 133.50 level is also a 50, is also coincides with the 50 period moving average as well. So we have a potential breakout of a 50 period moving average as well. Of course, 15 minutes to go until this candle closes. So wait. So all these are bearish indications, right? But without confirmation yet. Okay, another 15 minutes to go until this confirmation comes. But something that could confirm further decline could open the doors in the very, very short term to 133.10, and the very next support level, use your swing lows, it would be the 132.47, 132.50, rounded up is just fine. And out of curiosity, I'm gonna also apply a Fibonacci extension on the swing that we have seen. Okay, have I put it properly? Okay, quite close, not awfully bad, but it's quite okay. Yes, look at this beauty, very, very close to 133.10 that I told you about. Very, very, very close to the swing low that I told you about. So the levels that I told you to keep an eye on, if and only if we have a confirmation of a bearish, of a further decline, let's say, they are coinciding with Fibonacci extension as well. Okay, so something indeed is changing in cable, and if indeed that happened, you need to be alert. You need to be well prepared. So I'm gonna put the 30 minutes chart. Okay, look at this huge candle. Look at this huge, huge, huge candle. A bit sideways right now. Let's wait and see. And out of curiosity, I'm gonna put cable again, but using Heikenash. Okay, gonna use Heikenash as well. Where is my Heikenashi? Heikenashi. Pound dollar, pound dollar, pound dollar. Okay, this is Heikenashi in the 30 minutes chart and 1 hour chart. Look at that. Doji, bearish, but with a long tail at the top. Bearish, still still open. So let me put the 30-minute chart. Look at, okay, this is the 30 minutes chart. Doji, down, doji, down with a tail, and the very last one is without no tail at the top. Okay, so that suggests indeed the bears are in control. And guys, that looks to me no, ignore that. Now, are we okay with the cable so far, guys? So that's selling. Just insist. Okay, are we okay with the cable? Shall I move on to dollar? Okay, that's a very, very, very good question. Very good question. Okay. Basically, before I covered the comment of Abonga, I want to make sure that you're okay with the cable, so I could move on to gold, back to gold, and also to euro dollar, guys. Are you okay with the cable? Anyone? Let's go. Okay, perfect. Yeah. So a very, very good question came from Aboga. So let me share it. Okay, let me get back to gold. Okay, so I've heard of Middle East tension being something that will push gold up. Fundamentally, yes, that's the case. Remember that safe havens such as gold, dollar yen, Swiss, dollar as well is a safe haven, but because we have the Fed as well, is not going in line with this safe haven ability lately. It does it occasionally, let's say. And sometimes we can see some safe haven flows into cryptos as well. But nonetheless, yes, fundamentally, the most famous safe haven is gold. What safe haven means? It means that the asset that people jump into when they feel insecure, when there is a lot of uncertainty into the market, when there is fear. Because gold traditionally is an asset that doesn't lose its value, right? If you buy a jewelry to your wife, it won't lose value. Nonetheless, over the years, it will be more precious than before, right? So yeah, if we have any kind of uncertainty and fear in the market due to geopolitics or any surprises, anything, okay, we've seen cash flows into safe havens. Such a safe haven is gold, and indeed, overnight we might the tension, the Middle East tension, indeed might helped and might provided this floor to gold, but it wasn't as it was expected. I was expecting an even greater support, but nonetheless, um, sorry, okay, but as I said, it seems that the there is a bit of a muted reaction on the tension from the Middle East today, possibly because of Mr. Powell's comment overnight. And also, it seems that um, um, there is still some, how can I call it, assessment in the markets, whether they should, the assessment regarding the risk of this conflict. But indeed, my dear friend, um, fundamentals support gold. So as soon as we have a clear view of what's happening in Middle East, okay, uh, if indeed I haven't seen the what, let me put the Bloomberg at the back so I could keep an eye and keep myself up to date with any news that we have from the nearby area, because we're really close to it, to be honest. Unfortunately, a lot of refugees keep coming and coming. Such an awful situation. Yes, just to keep an eye whether something new happened in the Middle East. Okay, cannot see anything right now, but yes, you're right. Fundamentally, yes, indeed, geopolitics. The higher the tension, the more the cash flows into the gold. Okay, and also the fact that we are expecting a coordinated rate cuts from all over the world, excluding Japan, and the Fed uh, clearing on the path of further rate hikes is something that also uh, um, um, will support further the gold. And the reason for that is because dollar is becoming less appealing, less attractive, cheaper, so it's not a good investment. So usually we are seeing people turning into the gold in this situation. So fundamentals support gold indeed. Uh, Now, the reason why we've seen a bit of a muted reaction, I think it should be more or less the fact that U.S. market is still closed, China market is closed, Hong Kong is closed, so there is a bit of a muted performance. So keep an eye on the U.S. Open, because this is when you might see indeed the further recovery of dollar and even a return back to record highs. So if you cannot explain it, then keep yourself focused on the technicals, on your charts. Set your trigger points on the top and the bottom, um, in order to be prepared for the US Open as well. So I can see some news coming from Bloomberg. Okay, that's regarding NATO and Trump and Harris. Nothing really on the geopolitics yet, or at least right now. Let me check on the politics. Maybe there is something new that. Yeah, yeah, nothing that we don't already know. They are continuing targeting ground raids in Lebanon. Unfortunately, Hezbollah drones are potent threats as Israel moves incursion. Incursion, I cannot pronounce it properly. Yeah, no, no, nothing coming up for the time being. But yes, fundamental supports gold abonga. Keep yourself up to date. Keep an eye on 2655. Keep an eye on the 50 period moving average. Look at that. Look at that. Is retesting it and retesting it. It flattened a bit, so that raised some questions to me at least. Okay, but yeah, um, we have consecutive higher candles. MACD is improving, RSI is improving, stochastic is improving. So let's wait and see. Okay. As I told you, 2655, it's halfway of this decline, so it will confirm, it could confirm a swing back to record highs or even greater record highs. Now, euro dollar, euro dollar, euro dollar. So look at this beauty. How many of you have been here with me in the last live streaming when we added these great, I don't know how to call them, it's Fibonacci levels, but like with a slope? I don't know whether you had been here with me, but it's a great tool. I pretty like it to be honest. And look at this beauty, beauty. Kicked 61.8, kicked 100% already. Look at that. I'm gonna extend it, or actually, I'm gonna put it in dark. I'm gonna change a bit the setting so you can see it thicker. I think just so this and the lines, the extension lines as well, thicker. Okay, look at that. And I will put an extension to it so you can indeed see. Shall I put it? Okay. Left, right, left, right. Oh no. Oh God. Okay, here we are. You see, I use this Fibonacci with a slope when I saw that channel over here, that short-lived channel in this 4-hour chart, and indeed, as you can see, it confirmed the breakout. It kicked already and broken the 61.8 Fibonacci level, the 100 Fibonacci level, uh, and that was a very good call. Very good call. A tool that you might consider. Okay, right now, as I can see, is consolidated. Actually, it pulled back away from the 100 Fibonacci extension, drifted lower. So we have a nice floor over here, consecutive floor over here, but it's ready to basically it's in a downwards channel, it's in a downwards a trend right now. 1, 2, 3 consecutive sessions sideways, corrected a bit, further dip right now. RSI points lower, MACD turn negative, but the signal is above zero. Stochastic is negative, so there is some selling pressure in euro dollar as well. Look at that. Look at that. So basically, the next support, it lies down to the to the channel, to the bottom of the channel, basically to 11070 territory. Okay, here we are. That's the very next sub. Sorry, 110. Yeah, 111, which is nearly there, and here we are, 11060, 11060, or great. Basically, let me be more precise. Okay, should be 11072. Here is the proper one. Sorry. Yeah. Okay. These are the very next immediate support levels. Momentum indicators turn negative and they continue being negative, both in the 4 hour chart, in the 1 hour chart. Is pulling back to the top of this channel that we have seen in the mid of August. So yeah, and the momentum is quite aggressively negative. So even if I use high Kenashis, we should have seen a lot of selling pressure going on. So let me double check. Euro dollar, my euro dollar, euro dollar, euro dollar, euro dollar. Here we are. Yeah, guys, that's euro dollar in the 1 hour chart. Look at that. Look at that. Boom, 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 boom. Correction, sideways correction, and resumption. And why I'm saying resumption, because in contrast with the cable, euro is clearer. Euro has no tail at the top, and we have greater candles than cable, indicated that there is an increasing bearish pressure. Yeah, an increasing bearish indeed pressure. So it looks like it could easily retest the 111 and the 11070 territory. In the daily chart, what we are seeing is that, okay, this week it will be crucial for euro dollar. Why? It looks like a potential rounding top. Is way too early to tell, but a break of 111, okay, a break of 111 could extend this leg down one, two, yeah, with a support down to the lows of 110 level. Okay, too early to tell. Keep an eye on that. Let me get rid of these lines, get rid of that line as well. So food for thought for the next few days. That's the daily candle. 111 could open the doors or trigger the attention back to August bottom in the 110 territory. Intraday, it's in a selling, it's in a sell-off. Full body candles, bearish candles, keep pointing lower. If I put my setup, we can see that momentum indicators also in line with the selling pressure that we have seen intraday. Next support at 111 and 11070. Round number, the very first one, and the other one is basically the top of the channel that we have seen in August, and also consecutive support back in the beginning of September. Okay, now euro yen, half pound yen over here. Let's put euro yen. Okay, dear. Now, overall is neutral. Okay, sideways in the whole August and September. I'm saying sideways, I'm referring to the overall picture, okay? Failing to extend above the 200 moving average, and it has stuck in this zone since the end of July. That's the overall picture. Intraday now, okay, we have a pullback. I'm not quite sure why you told me to analyze this asset, David. Okay, indeed, we have a pullback. There is some mixed situation in the momentum. So, okay. Next support is just few pips lower. Few pips at the bottom of the Bollinger. This is the 30 minutes chart. So around 20 pips lower is the next key support level. But the momentum is mixed. MACD is still positive. Stochastic, okay, indeed, there is further room to the downside according to stochastic. According to RSI, there is further room to the downside. Um, but Bollingers have flattened, so that keeps me a bit cautious about the euro yen. So the next floor is at 159.72. Comme ci, comme ça. Okay. Okay. Now let's move on to Dow and Nasdaq. No one asked about. Okay, never mind. Uh, okay, my dear friend, si buonissimo. Guys, the equities. Okay, we have seen some consolidation. Let me clear a bit this mess. Okay, this is Dow. Okay, this is Dow in the daily chart. We have seen some consolidation, as you can see, 1, 2, 3, 4, 5, 6, 7, 8, 9 for 9 days in a row. But the equity market are in a bullish outlook. Rate cuts support the stock market. Okay, and there is nothing that looks to threaten, let's say, equities for the time being. The more the rate cuts, the higher the stock will get. Now, we have this impressive break of this double top over here, and that's something that happened last week. Gapped up and keeps rising higher. So the only thing that you can do is just keep an eye on the latest highs and the latest lows, just to search for breakouts. Okay, a bit more precise. Here we are at the top of the fractals. So a breakout of 42,700 opened the doors further to the upside, new record highs. A breakout of 42,213 could correct Dow, could lead to correction of the Dow down to 41,800 territory, 41,600 territory. But a move lower, is expected to be just a correction. overall positive, positive, positive. So if you want to trade this kind of assets, um, okay, if you want to trade them in the short, in the intraday basis, in the short term, you need to, of course, find support and resistance levels. But what I can see in this on 1 hour chart in Dow is consolidation. Look at that, flat Bollingers, MACD flatten, stochastic flatten, RSI is flat. The 5 and 9, okay, they had a bearish cross, but not confirmed. It's very, they are very narrow. They are not in a significant slope. So for the time being, there's nothing really. Just just a potential retest of the bottom of the Bollingers, which is not. Hmm, just yeah, just that. Just keep bouncing within this range. And put the 30 minutes chart. Okay, cross, they keep pointing lower, but yeah, but that's just it. Just that. Let me check the Nasdaq to see if it's a bit more. Same. Small body candles, posting higher highs. Sorry for that. It's still well below the high, the record high that we have seen back in July. That looks to be, okay, let me clear this mess, okay? As you can see, Bollingers are pointing higher, so it's just a bullish outlook overall. So any break higher, you should just turn your attention further to the upside. But I just noticed something, guys, okay? Look at this beauty over here. Let me just get rid of the majority um, of the indicators, because that looks to me like a W, isn't it? Looks like a W, isn't it? Let me just okay. So look at that. 1, 2, 3, 4 so far, which is still developing basically. Yeah, that's nice. So okay, it's very, very nice because it has already broken the bottom of the neckline, how we call it, the middle peak of the W. Okay. Um, so this is a bullish formation. This is a bullish formation. And the fact that it broke the middle line and extended higher indicates that it confirmed that bullish formation. So in this case, the W pattern, the theory says that could have been a trigger point for a move to the upside. So what's really what we're usually doing in this case is measuring, okay, measuring the neckline. Okay, it's in a slope, so I'm not gonna, usually we measure the middle peak until the bottom of the W, but in this case we have an ascending W. So I have put it until that bottom over here, okay? I'm measuring it. So theory suggests that a confirm bullish W formation indicates that the asset will move further higher. That's in the long term, guys. Okay, we're in a daily chart, and a potential with a potential target at basically 21. Let me be precise. 21 920. Okay, that's a long way. A more imminent resistance area will be the 21,000 territory. Here we are. Oh, come on. 21. 21. Okay, perfect. So put this line on, these lines on, sorry, for future reference, okay? So now, what else? Let me also confirm this approach with a Fibonacci. Just be precise. Have I put it correctly? No, I didn't. So high, low, perfect. And look at this beauty. Look at this beauty. Coincides with the 161 Fibonacci level. And that's just beautiful. Okay, I'm gonna get rid of the Fibonacci for now because I have cross-checked anyway what I wanted to do. So yeah, it's a bullish pattern. So keep an eye on that. Okay, keep an eye on that for sure. Now intraday, up, clearly up, corrected a bit sideways, we could say. So it is what it is, guys. Quite clear, basically. Latest swing high is 20,393, and move above it could open the doors further to the further higher. 21,000 is a key up resistance level. A flip lower, which looks unlikely for now. We have a consolidation. As long as the 20,060 still holds, there is no indication for a pullback. Okay, so it is what it is. It is what it is. Wait, so we have further questions before I call it a date. Let me check. So yes, if you're referring to Francois, yes, we're colleagues. He's a market analyst in South Africa. He's excellent. So anything you need, if you are in South Africa, anything you need, just contact them. It's a great team. We're very, very lucky to have the South African team. Good morning, Purple Girl. So, David, I haven't ignored your question. Now it's time to explain carry trade. So, very, very briefly, okay? A carry trade is a strategy at which, basically, let's assume that we have two countries, okay? We have Japan, okay? Shall I call Japan? Do I have a better example? You know what? I'm gonna share with you because it's different if you watch it and different if you... Okay, so let me see if I can share it with you. Okay, here is the world's latest interest rates, okay? So in America, we have a 5%. And what's the lowest one? Let's see. Japanese, we have a 0.25%, right? Okay. So you understand that if you invest your money in Japan, can I get just a 0.25% return on your investment? If you save your money in Japan, in Japanese bank, you're gonna get peanuts back, 0.25. But if you invest your money in UK, in US, you get a 5% return of your money, right? So, carry trade is the strategy at which people borrow money from a country that has really really low interest rates, and they invest in countries that they have really 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 high interest rates in order to benefit from this rate difference. Okay, so let me just stop sharing that, get back to my okay. So very, 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 how can I say that? Very, very briefly, this is this strategy called carry trade. Okay, so the question was, sorry, let me see. Can you explain what is carry trade? I heard there was a carry trade last month between dollar and yen. Okay, let's put dollar yen as well. By the way, I'm gonna save these formations over here for next time. Save file, save. Yeah, okay. Let's get okay. Now let's get back to euro. Sorry, dollar yen. And you said that you heard that there was a lot of carry trade. Um, uh, Oops. Come on. Sorry, guys, just a second. Okay. What's going on? Give me a second. Something is wrong over here. Okay, we are back. Yeah. So, sorry, wrong. I wanted to share the deposits, but it was a wrong tab. Just a second. Okay, so I'm gonna put the daily chart on. Okay, here we are. So we have seen in general that come on, Andrea. Okay, we have seen in general dollar yen drifting lower for nearly the whole year. Okay, so what that means, it means that yen is strengthening, right, against the euro dollar. Why is that? Because indeed there is a lot of carry trade going on. You can tell me, but Andrea, you just mentioned that US has a 5% 5% interest rates and Japan has 0.25. So what are you talking about? Remember, okay, that markets are always ahead of themselves. So there is a lot of carry trade going on the prospect that Fed will have a really, really aggressive easing, aggressive rate cuts, while on the flip side, we're expecting that Japanese will continue increase their interest rates. So, if I'm not mistaken, let me put the Fed Fund future somewhere. If I'm not mistaken, we're expecting 25 points in November or even 50. There is a lot of debate. Fed futures, come on, where are the Fed future watch, Fed watch? Here we are. Okay, yes, we are expecting 25 to 50 points in November. We are expecting the markets basically are priced in, and they are seeing That's for November. Yes, they're 25 to 50. For December, the indications are for another 25 points, and we they are forecasting, the markets are forecasting a nearly 150 points of rate cut for the first half of 2024. Okay, of course this might change, but this is what is expected to happen. Okay, what the market is seeing right now is forecasting right now. So it seems that sorry for that. It seems that there is a lot of carry trade going on from the safety of dollar to the yen as an investment. Okay, and this is something that we have seen also last week and the week before, if I'm not mistaken, in August as well. Yeah, it was August, beginning of September, last week as well. And if I remember properly, in September, it was more than 200 billion dollars. I mean, I think it was more than that. Okay, it was. I think that there was a carry trade around 200, more than 200 billion dollars, which and not only on yen, but Swiss as well. Okay, so is yeah, so not only because of the interest rate hikes, but also on all this uncertainty around the market, um, people trying to liquidate their trade positions as well. So if they had a trade position open, they want to liquidate to cash out. Okay. So this is also the when we say carry trade, we're not only referring to this strategy, to this move from one asset to the other in order to benefit on the returns. We are also referring to the action of closing a position that was based on a carry trade. So, cashing out long-term carry trade positions is also something that led to this dip of the dollar yen, because the last 3 years, I think 2 years, people were turning to the US economy because of its to the US, to the Europe, to the UK economy, because they offer really, really high interest rates. So a lot of Japanese investors moved out from Japan and they moved to the US, to Europe, to UK. Now that they are seeing that the Fed will cut rates, they are starting cashing out from their carry trade positions. I'm not referring to retail traders. I'm referring to big investors, to big companies, to big institutional players. Okay, so we have a lot of liquidation of long-term carry trade positions as well. Um, yeah, so and more is coming basically. More is coming apparently. I found a very interesting Financial Times report earlier that um, they was comparing the deposits back in 2020 with the current ones, um, and we could see this shift from Asia to Europe and to US. Um, so yeah, that carry trade factor um, that had been going on since the pandemic, something that is playing a key role since the pandemic. It's an approach that is going on for the last 4 years. Um, so yeah, hopefully I covered your question, my dear friend David. That's a long, long, long topic, my dear friend, because we have plenty of events, market moving events. Is NFP, is inflation, is growth, is central banks comments, geopolitics, earnings season that is nearby. Um, what else? What else? What else? Yeah, there are plenty. There's seasonality as well. So if you're very newbie over here, it's better to start by watching some webinars that we have in our YouTube channel, but also in the past webinar channel, explaining the fundamentals firstly. What I can tell you right now, okay, if I just, let's say, if I focus on on oil, for example, or um, for example, okay, let's take an example, okay? We have oil over here. You can see that this is in a dive, broken, and actually keeps moving below $70, is extended, it broken the $67, and it keeps dropping and dropping and dropping. That is on the fear of supply disruption. Sorry, that is something that basically, okay, we have two things over here, okay? Tension tends to support the oil because it indicates a disruption in the supply, in the production. So the less the production could get, the more expensive the oil could be, right? But why this is happening? Why today is keep moving lower? Why? What triggers this sell-off, let's say? Remember, I don't know whether I mentioned in the last live, but for sure we mentioned it in our articles. Saudi came out and said that, you know what, whatever is happening, I'm not going to cut production. I'm going to continue with my current production. So I'm going to keep producing. Also, the OPEC plus, which is the all the countries that produce oil, they also said that they are not really planning to back up on production either. At least they didn't come with a plan to confirm that they will back up in production. So what that means? It means that with China being a slowdown, so having less demand for oil, geopolitical tension as well, that could also disrupt um, um, the demand as well. And on the flip side, we keep having oversupply in the market. There is the fear, basically not the fear, these are catalysts that pressure oil lower. If the supply is higher than the demand, this is negative for the price, right? If supply and demand, if we didn't have the fear of oversupply, the tension in the Middle East should have supported the oil. But instead, it's the vice versa because there is still the fear of an increased production from the OPEC and from the Saudis. Okay, that's why we have seen that that factor dominates over the geopolitical tension right now in oil. I think OPEC has a meeting tomorrow, so things might get clearer tomorrow. So yes, oil looks that is driven mainly by the fear of overprotection rather than the geopolitics. Okay, so it's in a downwards channel as you can see. Oops. No, 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 no. Come on. I want the proper channel. Here we are. Yeah, just perfect. 1, 2, 3, 4, 5 days in a row to the downside, but above the mid of the channel. Okay, only break below, a crossing below the mid of the channel, like this one or this one, could retest the channel. So it could suggest, it could open the doors to, come on, to the 82, 83 territory. Yeah, we need a closure below the midline in order to open the doors to 63. Of course, this is high Kenashi candles, so the fact that we don't see any tails at the top indicate that indeed this move will continue. But remember that you need always to wait for confirmation, okay? So, oil, oops, oil in a bearish momentum in the daily chart and in the intraday basis as well. This is a huge dip which basically retest this latest low at 67 60, yeah, 67, 66 and 90 to be more precise. We have, we have another 20 minutes to go for this candle. This is a 30-minute candle, sorry. 1, 2, 3, 4, 5. It keeps moving lower. The candles are big body ones, no tail at the top, nothing to indicate that there is consolidation. In Heikenashi, only if you see a tail at the top or a doji candle could indicate that is running out of steam. For the time being, both intraday, short term, and overall outlook for oil remains negative. So this is a one way to explain, let's say, oil with the market moves events, dear Lyrica. But this is a big area that you need to start from the basics, okay? So guys, I'm gonna call it a date. We're gonna have an NFP live on Friday, okay, with Mihalis, okay? So don't stay tuned and oil is keep moving lower. Yeah, we're gonna have an NFP live on Friday. So regarding NFP, what I know so far, what I have seen so far is that there is some, it's expected to come lower. Okay, it's expected there is a lot of downwards pressure. So that is something, if indeed it missed expectations, and even if it missed the expectations by a big amount of, I mean, massively, let's say, that could confirm that Fed has the green light to proceed with a 50 points rate cut in November. So this week's NFP and the next one, they are the two most important ones because they will give light to the whole upcoming policy outlook. So a big mist, not only on the NFP number, but even a slowdown in the wages, in the hourly earnings, and etc., should be in focus because they will give light on how big the rate cut could be in October and in November, more precisely. Okay, the so another slowdown in the NFP, depends how big that slowdown will be. It could confirm the Fed to get aggressive. So what that means, it means a weaker US economy, so dollar could extend lower, gold could spike higher, stocks could be well supported. Okay? Okay. So, guys, I'm gonna call it a date. Thank you very much for watching. Hopefully, we managed to help you. Have a great day ahead. Have a great weekend ahead. Okay, sorry. Have a great week ahead. Sorry. A great day ahead, a great week ahead. Take care. Don't forget that um, we have today inflation from Europe. We have a lot of Fed speeches. We have NFP on Friday, ISM services on Thursday. So it's a packed agenda, okay? Packed agenda, and unfortunately, the situation in Middle East as well. So keep put TV on. Put I don't know, the Bloomberg TV live on the side of your PC. Try to keep yourself up to date with the news, please, 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 please. What else? What else? Join our NFP live on Friday. Take care, and we're gonna see you again on Friday. Thank you very much. Have a great day ahead. Bye bye.